Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Friday, February 7th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at March corn down 3.5 at 491 3/4. March soybeans were down 5.5 at 1055, and March Chicago wheat was down 2 3/4 at 585. This morning, jobs report was out. We added 143,000 jobs in January. That was far below the estimates. They were looking for a number closer to 169,000. However, the unemployment rate did edge slightly lower to 4%. Nothing in the way of export sales announcements here this morning. We did have a Stats Canada report. Kind of the general takeaway was slightly unfriendly for wheat. We can talk a little bit about that. But outside of that, guys, nothing really fresh in the way of news, just a little softer overnight. Weather could be, partially weather driven, money movement. But anyway, Dustin, maybe a few thoughts to kick us off here this morning as we wrap up the week, and then we'll throw it around the room.
Yep. Well, we've had a heck of a rally, and it seems like the overnight markets tend to want to be bearish coming into the open. And for whatever reason, the day session volumes coming in with decent bids. We were touching 470 for the first time in a while here on the D's 25 contract. We've got a fairly low ratio. We've got, 4 of those 19 trading days set for the federal crop insurance at levels better than what we probably would have expected a month ago. So things are definitely in a much different spot than they were in December. And I still kind of go back to the real might be a big portion of this. Obviously, we had a really favorable January report and some other things that I think have given us some tailwinds for this. But I have to think, the real coming to one of the best runs it's had in 20 years, 11-day, win streak here. That's a big part of it too. And we have had, since the morning session closed, we've had the real jump again too, and some of this data. So just something to think about going into the day.
Yeah, Dustin, you referenced crop insurance. Those prices now $468 for corn and $1066 for soybeans. Justin, I was going to ask you, next week, we're going to be halfway through the discovery period, which we know on the back end it takes a larger move to move that average. But, with these prices, we've talked about ratios and different things like that. What's your opinion on, we talked about it a number of times, but I guess, is anything changing on the acreage side or what you anticipate here as we come into then March for planting intentions?
So did you say me or Dustin?
Yeah, you.
Okay. Yeah, it's going to be an interesting one. I talked about it a little bit yesterday, but it's the lowest, soybean versus corn ratio we've had in a while. So, it should favor more corn acres. The question is going to be how much. We've talked about a lot in the show, cost of production is very high, flat price is relatively low. So margins are kind of in the, we've obviously improved a lot, but we're kind of coming from kind of big negative areas to, maybe you can pencil it in, if you use, generous yields and some assumptions on other things. But, we haven't really had this combination of, relatively low flat price, really high cost of production. So the question is going to be when growers go out there and have to, finance the inputs, all those kinds of things, to have those conversations with the bank, which have been going on now for months. How much more money do they want to spend growing corn at a break even or a loss? So I think that's going to be the question. So the ratio 2.27 currently. It was 2.42 last year, right around that area. Last year people were talking about a lot more corn acres, and we kind of argued that wasn't the case with high costs. So now the ratio is more in favor of corn. So to get some rotation back to corn, I think makes sense. Right now, I think the market is probably trading a 95 type number, 95 million acres of corn. So we're already kind of talking or trading, I think, more acres. I think they're needed for corn with the tight situation that we do have in the U.S. and in the world. So I think to get a big push above any numbers like that, you'd have to have a big price move. Yeah, I think you'd have to be north of $5. Personally, going into planning or going into crop insurance, even which we're in right now. So I think you'd have to have a big move from here. 467. I don't think screaming for a lot more corn acres. So a natural rotation back to more corn, yes, but I don't see a 97, 98, any kind of crazy number like that.
Yeah, Ben, thanks for hopping on here this morning from the Delta. What's on your mind this morning?
I love we're at that time of the year where acreage conversation becomes kind of front and center. And I spoke with some Delta farmers this week, and they're very unhappy with cotton prices, and they're not in a place yet where soybeans look appealing. So I do think this is an area where you could see heavier corn. This time last year, we were looking at much better bean prices that kind of favored that. So, that's a component of the acreage pie. And I think there's a possibility, I don't think that we're headed to anything as drastic as last year on acres, but this is a place where that's one of the shifts that could take place. Indiana and Ohio, those are places that are very rotationally driven. There's 3 or 4% that can probably switch back and forth late in most cases. And then I think it gets back to, really the Iowa, Illinois type farmer where they're going to go with it. So it's a moving target. And, hopefully at some point we make both of them look good. That would be the optimal outcome. I think there's a lot of people say, February report, what that's going to be. I think watching that come out, if there's a trend, in some capacity that would lower carry out for either would be supportive again. And I think until that changes, you're going to be hard pressed to see a sell off in corn, a harsh sell off.
Yeah, no, it's interesting, and this is for I guess Justin, maybe you can kick us off. We've talked about it a number of times, but I did have a grower reference it yesterday. As we get into March, where are they going to start for yield? Right. I mean, this year we printed a 180 and thought, by all estimations, we thought we saw one of the best corn crops. And then we did see one of the best corn crops of all time. But to still crack that 180 number, I mean, are they going to start there? I mean, what's your opinion?
Yeah, I think their trend line is their trend line, and they're going to come out at my guess is a 182, something that we've never seen before. But that's, I don't think they're going to be super quick to change their math. I don't even know if they know who started that math. So they're going to come out some big number, whether the market believes that or not. I think when we cut yields, the last report, I think it made you kind of rethink, what kind of weather. Like, what if we have not good weather? We've had pretty good weather here for a few years now. We've had some kind of, I think we took the edge off. Last couple of years where we kind of had a dry August or maybe not the greatest finish, but last year, for example, we had a really good year. We had really good planting. We had good pollination. It's really hard to have a perfect year. A perfect year is 04, 14, 94. Where you just have perfect weather and then we blow trendline yields. We blow past them. So. I don't know. I think there's going to be risk premium in the market. I think we're tight enough now of a situation where a lot of people have hated this rally and don't understand it because we're coming from lower prices. But kind of looking at we're in areas where it's kind of a value area. We're not expensive by any means. People are making money. We're using it. So yeah, what the government comes out with yield, I'm guessing it's gonna be north of 180, 182, something like that. So, we can say it's gonna be bearish on paper to start. I don't think the market's trading that anymore. I think we're I think we're past that, and we're looking at, what people think it really is going to be.
It will be fun to watch X heads explode when that number gets printed, because that's just always comical. But
Yeah.
no, good stuff. Anybody else before we move on here this morning on the grain side? Been a busy week. We've had a lot going on, but
I just wanted to get like the group's opinion on wheat real quick, just because I've had a lot of questions on that, and I think people are probably asking on that. We've had a sizable rally in wheat, and it's actually surpassed the corn rally in the last couple of weeks. So we got down to a fairly low ratio wheat to corn, and that's kind of bounced back. So Justin, do you have any thoughts on this? Like maybe it's because the funds are short, or is there something bigger?
Yeah, I talked about a little bit yesterday, but wheat, and Ben and I talked about this yesterday as well. Wheat globally is pretty friendly. I think the stocks to use is relatively tight. The downside is that the U.S. is kind of the residual supplier, right? So we're always the last ones to get the business, just the way that we're structured. Got cheap to corn. So to me, it's like wheat and corn kind of have these friendly world numbers. Stats Canada came out a little bearish today, 1.5 million tons, but that's kind of that's really nothing in the big scheme of things. So yeah, I think having wheat as the short leg has worked for so long, and now it's not. So I think we're just getting that, kind of running in shorts. The fundamentals really don't support it being just ultra bearish from here. Technically it's turned up. So, I'm not just a huge bull in wheat, but I certainly don't necessarily want to be short it, and I think that's maybe what the managed money is thinking too. It's not paying you to be short right now. So that's kind of interesting to me, because they don't really have a short leg. They tend to love having a short leg, at least the last 5 or 10 years. And, wheat's not paying them to do it anymore. And they're losing money having that as their short leg. So I think that's a big part of it. Have we seen a ton of demand? No, it's been decent. You could argue Ukraine, Russia, is in question on their crops. Obviously we've got some kind of cold weather moving in.
Yeah.
Wheat's a grass. I can't remember really years where it actually gets hurt, but we definitely rally on those fears. So that's my opinion. I just think it's not a great short leg right here. Ben, I know you have some thoughts on it.
Yeah, I'm the same way. We got down and traded 30 to 60 for quite a while. 5 or 6 weeks, it lost its momentum, and I think that speaks volumes to what you're saying about they stopped getting paid for being short wheat. And we're in a period here where we can do some business. Some of the better wheat markets, this is the time where from here through May where things can get really dicey in wheat. And we see Russian values appreciating a little bit. And they have some areas that are not ideal for weather. And wheat to me is always the one that you have to the saying is, sell wheat, live in a mansion, right? And that's true until it's not. And I think that we're in a period where being short wheat could be very problematic for anyone. So I think that it definitely extended further lower than maybe it should have. And there was a lot of, there was a, spread, buy corn, buy old crop corn, sell new crop corn, buy corn, sell wheat. And I think they're starting to exit. And people, I think that's where you're seeing some of the selling up in the high end of the range in corn as people unwinding that. It's not something that I think you want to be short right now.
All right, very good. With that, we got a couple minutes before we come into the open here. Rye, it looks like kind of lower choice cutout and slower kills are rattling the cattle complex, and by all accounts, we're kind of getting quiet in the hogs after some good volatility there. So why don't you put a bow on the week for us?
Yeah, no, it's been a big sell-off in the cattle. Definitely some liquidation yesterday. Maybe some of that was from the headlines over the bird flu that was detected out in Nevada. So, I mean, we kind of expected a little bit of a negative reaction, but it just seemed like it just kind of snowballed. So hopefully, we did trade down. April traded right down to the 40-day moving average and held. And this is going to be, I think, a very significant level. So you got a lot in the hopper here coming up in just the next few days. You got February option expiration, you got first notice day. So really looking to see maybe a little bit of support on the technical side. But on the other hand, Packers are definitely leveraging the weakness on the board. They were able to get cash a little bit cheaper here, about $2 lower, pretty much from what we've seen in the South, 205 to 206 in Kansas, 204 to 206 in Texas. So it's starting to crack a little bit, but there should be a lot of capital movement, I think, just in the next couple of days here. We got the roll starting. So it just seems that if there isn't another heavy kind of round of liquidation, just feels like the longs are just going to be pushing ahead at lower prices. So we'll be keeping an eye on that. But overall, just really hoping these support levels hold at this point. On the hog side, yeah, just two-sided trade. We did make a new high for the move yesterday. Kind of recovered from the past week. I think you've shaken off a lot of the concerns over the tariffs, but at this point, like the cutout's starting to move a little bit higher. I think that's where the real focus is right now. Cash markets were a little bit weak, down 48 yesterday, but not enough, I think, to really shake this thing out. So just really good momentum. Expected to manage money is still going to want to stay pretty firm here just from a seasonal standpoint. So expect maybe a little bit of support here in the meets this morning.
Very good. Appreciate that. Thanks for the update. We've made it, fellas. We're wrapping her up. But with that, everybody's favorite segment of the week, Brian, I heard Super Bowl edition of Fun Fact Friday for us.
Yes. All right. Happy Friday, buddy. Yes, you're right, Dan. Super Bowl edition, Super Bowl 59, KC versus Philly. LIX in Roman numerals. Ryland, it's not called Super Bowl Licks.
Too bad.
Top fact, this year's Super Bowl, President Donald Trump will be the first sitting president to attend the game. With suites going for about $2 million, maybe we'll see him hunkering next to Taylor Swift or Brittany Mahomes there. So something fun to watch that for the Super
I'm sure
Bowl.
she'll have a MAGA head on, Taylor.
Make America great again. Some fun facts for the Super Bowl. Average price for a ticket this year is $11,000. That's up 17% from last year. 113 million Americans plan to throw a party at the house. 17.6 million will enjoy the game at a bar. This is the second highest consumption of food right behind Thanksgiving. Speaking of food, 1.45 billion chicken wings will be consumed. 10 million pounds of ribs will be eaten. 54 million cases of beer is sold on Super Bowl Sunday. That's about 300 million spent on beer, 226 million spent on whiskey. So leading with all that alcohol consumption, 16.1 million people will miss work on Monday. Going into the commercials, an average 30-second commercial is 7 million for a 30-second commercial. Wow. Anheuser-Busch, since 2006, has spent 659 million on Super Bowl ads. Heading over to the betting arena, 1.7 billion will be legally wagered on the Super Bowl this Sunday. That's not counting all the money going with, your bookies. But
another $2 billion on the black market.
Yeah. Something to watch. There's 71% accuracy in this. If the NFC wins, the stocks will rise. If AFC wins, stocks go lower. So something we'll have to watch after we see who wins this game on Sunday. Some crazy prop bets. Ryland, I think you'll like this one. If the Chiefs win, will Andy Reid be doused in barbecue sauce?
I mean, one would hope. I'll put some money on that.
Yes is plus 1,600. No is minus 15,000.
I'm sticking with this one. It's
I like my chances.
Yeah, right. Number of beers sold over under is 120,000, and it's minus 115 for the over, and under is minus 150. I would go over if the Superdome holds 76,000 over. Yeah. That's 2 drinks a guy. I mean, I know not everybody drinks, but
you got to hammer that over.
That over. Yes, yes.
So if 54 million cases of beer are sold, that's like 4 beers for every American, including kids.
Rock on.
I mean, that's pretty amazing.
That is.
Well, we know some guys that'll take care of that. So I mean,
shouldn't be a problem.
I like the 60 million sitting at home on Monday. That's fun.
Right? Isn't that crazy? And then I'll just leave you off with a Super Bowl dad joke. What is Sir Mix-a-Lot's favorite part of the Super Bowl?
Yes.
he likes big punts and he cannot lie.
Oh my God.
Wow.
Happy Super Bowl, everybody.
Happy
Have a great
Super
weekend.
Brian, you are definitely the dad of the group. No, real good. Thanks, Brian. That was good stuff there. Real quick, coming into the open here, we got March corn down 4 3/4, 4.90 1/2 is the last. March soybeans are down 8 1/4, 10.50 2 1/4. And March Chicago wheat is down 5 at 5.82 3/4. I know we've talked about it a number of times. Jack's got more info in the outro, but we are running a special offer here till April 1st for folks that are looking to give AgYield a shot. Give us a call. You know, we talked a lot about crop insurance, how it integrates with your marketing. Got a lot of real good ideas here that we want to look and analyze for you, especially through February as you're making that important crop insurance decision. So don't hesitate. Give us a call. We can run through your individual operation for you. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything that's going on with AgYield. And again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Hope everybody has a great weekend. Enjoy the Super Bowl, and we look forward to talking to you again on Monday.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.